Welcome and hello and hello and welcome and hello and welcome. Today we take it back to our roots. We are talking SoFi Technologies Incorporated. Ticker symbol, of course, is SOFI. This is Un Poco Mas. Thank you for joining me on this extremely special Tuesday edition. This show could actually change your life. So listen up, get out a legal pad, a couple of number 2 pencils, sharpen those babies up in one of those. Don't do no electric sharpening, one of those old school twist sharpeners. Sharpen that baby up and take some notes. We're talking SoFi. What's up, mrusso215? Hello and welcome. Welcome and hello and welcome. Thank you for joining me. They call me Little Danny Cornbread DeCarlo because I'm moist, doughy, and I crumble under pressure. They call me the tugboat because I am short in stature, pull more than my own weight, and I'm rarely far from my home port. They call me Stubby Cohiba because I once had an unfortunate manscaping accident with a Vitamix blender back in the early 80s outside of Miami, Florida. Let's just say they call me Stubby Cohiba and leave it at that. Anyway, guys, I don't have too much time. I want to basically talk to you. My new price target on SoFi is $24.75. I really feel like a breakout is imminent on this stock. I think it's going to $25, and I think it's going to go there sooner than later. A lot of people were, pretty suspect when SoFi was just being held down around $7. And every single YouTuber out there, every talking head, every author, every article, they were all basically echoing the sentiment that it was a dead stock and it wasn't going to go anywhere. And immediately after that, it shot up to 15, then shot up to 18. So this stock moves in a huge hurry. Now, this is something I'll address on the technicals in just a moment, but notice the volume today, 92 million. There was a hell of a lot of churn, and the algo was pulling down hard. This is not a sell-off. And rallies don't end on, strong volume. Rallies don't end on a bunch of buying. Rallies don't end on accumulation. I think this thing is poised to break down 20, and I'll try to explain why as best I can. But the last time I think I did a SoFi video was when this thing dropped down pretty recently down here, maybe in April. It dropped down, I think, to $8.60 or something. I was buying very, very, very heavily. Made a couple of 6-figure buys down below 10 there, and obviously have been handsomely rewarded, not necessarily in the looks department, but in financially. If you look at what's going on with this chart, we reached a bottom here and it's come up. You see this upward line. It was trading as kind of support until this 1366 level, which was the exact same level it petered out at here and here pretty much. And then it kind of flipped under to resistance. And now I would say we're breaking back through this line. Now, why do I think it's not going to fail at this exact same level like it did right here? Well, look at the distinction. Like, if you look at the volume and you look at the shape of it, it's increasing into the rally. You see the slope, you see the increase in price get more extreme as the volume goes up. You see the same thing happen right here in April. You see this little slope, then you just see the stock take off. You see it peter out, but the rally's not over. How do you know that? Look at this huge green candle. Rallies don't end on huge increasing bullish volume. Now, contrast that to when this failed over here. You don't see any huge green candle, and you see the volume basically start to descend. Now, look at this red candle, smaller volume than that green candle, and then this green candle where the stock supposedly goes back up. They're just drawing more people in. The volume's actually going down. That's not what's happening over here at all. You see the volume actually come to a low in December and early January, December 2024, early January 2025. Ever since that point, the last 6 months, the volume has been picking up very, very steadily. And again, that's not how rallies end. That's generally, speaks to continuation. So I think we're going to break through this level. We're not going to do what we did here. Volumes dying, buyers dry up. I think there's plenty of buyers coming into the stock for these rallies. I think institutions want the stock up. So I think the technicals, the volume, everything we're looking at now, it has run up quite extensively. But I think the stock's been undervalued for a long, long time. And again, it's like trying to drown a fat guy. The further you push down, the more the buoyancy takes over and the cream rises to the top. In terms of the short interest, still pretty heavily shorted stock, 14% of the free float. Now, notice that short interest is around 150 million shares, and shares on loan is only 97 million. So there's a hell of a lot of naked shorting going on. A hell of a lot of tomfoolery, people long short. If you look at institutional ownership, staying very, very steady at 550 million shares, fell off just a little bit, but if you look at the overall trend since June 2023, it tends to pop up and then just taper off a little bit. And you'd expect a little bit of a taper right here because the share price ran all the way up to $18, and then you expect institutional owners, when the stock runs from 7 to 18, to take profits. Any smart retail investor would probably do the same. You could have sheared the sheep dozens and dozens of times if you would have got on the bus with the smart money. But anyway, so institutional ownership remaining very solid. Insider ownership, again, remaining extremely solid at 17%. Like Noto has 10 million shares. Freaking Chamath has 19 million shares. Like the founder from, De Medeiros, Carlos Enrique. I think that was the guy who founded, which one did he found? It wasn't, I think Clayton Wilkes or whatever was the founder of Galileo, or he was the founder of SoFi. I can't remember all these names, guys. I really haven't been, tracking the SoFi stock like I used to, only because I just have a huge position in the stock. And frankly, they continue to exceed my expectations. They're so steady. Like, and this is just funny, like KBW, like I say, KBV for Vendetta, they have a huge hard-on for the SoFi stock. If you remember, it was the Pitbull Michael Perito who did that New Year's Day massacre and just, set off that ridiculous pre-canned sell-off where SoFi went, down like 40% or whatever, and in short order, and retail jumped out their windows, and it was just basically carnage, blood in the streets. But yeah, Tim Switzer again, sell $9. Yeah, I'm not really surprised. Bank of America is a sell. Kyle Joseph. So they've been getting a lot of buy ratings, a lot of positivity. Dan Dolev at 20, but I think they're really underestimating the stock. I think it should be selling somewhere closer to 10 times forward sales. And why is that? I mean, for me, it's just remarkably consistent growth, good management, good business model. It's not just total addressable market. It's a concept I referred to previously as surface water. It's like, how easy is it to go and get those revenues? How easy is it to go and get those profits? This is a field that's been well plowed. It's an industry that is easy to understand. What they're doing is modernizing, bringing technology, bringing AI. This is clearly a technology company. You see revenues coming in from financial services, revenues coming in from this loan platform. I mean, if Robinhood has huge increases in their financial services segment, everybody's going to say that's due to their great technology. But when SoFi has this incredible growth in financial services, oh, they're just a bank. We're not going to pay them off for that growth story. But one of the things that makes me so confident in this company is the consistency of the growth. Do you remember when SoFi had that horrible year and sales fell apart and their reputation fell apart and half their customers left and they lost all their part? No, neither do I, because SoFi hasn't done that since going public. If you look at 2021, they're doing under 200 million a quarter in sales. Okay, they break through just 300 million in 2022. They've doubled the sales to 600 million in like 6 or 7 quarters. And then they're almost up to 800 million in another 6 quarters. The growth is remarkable just on its face, but what you notice is the consistency, how they never have, sharp rises and falls, how they never have these, amazing, incredible quarters followed by an incredible. This is what you want as a long-term investor. You want safety. You want consistent. I don't understand why you pay a higher multiple for something that seems, cutting edge. I read that risky. Competition's going to come. It's unproven, versus something that's tried and true, but being done in a new way. The concept of surface water, the way I described it was basically you have your goal is to get water or money or profits. Now you have one guy, Anthony Noto, who comes to you and says, hey, I have this huge pond of surface water. I can just easily acquire the water, give it to you. And you have this other guy like a Palantir, some of these other companies, they're saying, I have this very complex thing that no one else can do. We're going to drill down through the rock. We're going to get this filled. It's going to be amazing. But you're pricing in perfection in a company like Palantir for 10, 15 years. I mean, I firmly believe the multiples are just so crazy. It doesn't matter if they grow at 30 or 40% for the next 10 years. They're never going to catch up to that market cap, where SoFi is undervalued for the growth story. I mean, they're really still not getting paid for the growth. I mean, if you think about the consistency, if you think about the quality, now think about the other thing I think is like, it's impossible to go back and do foundational work after the fact. What I mean by that is when you're setting up your mission statement, you're setting up your business plan, you're setting up, sort of your ethos as a company, your, bedrock principles. SoFi is basically this diversified wheel business model, cross-selling. They've lowered their costs through the technology platform. They've lowered their costs through the bank charter. Lower cost of capital across your entire enterprise is a durable competitive advantage. Now, Robinhood might be able to become a bank later. Some of these other companies might. I don't really think so. I don't think it works that way because they've planted their flag as a trader, as a young, brash Lambro, tiny wing, huge bag of blow, man on the town, cheap Versace suits, et cetera, et cetera. SoFi has branded themselves as a sort of more family-friendly, consumer-oriented, going to help you save for the long term. We want to be with you for your entire life. SoFi's stated goal, if you listen to Noto, is maximizing the revenue and profit from each member over a lifetime. And that's sort of the definition of a discounted cash flow model. You're talking about how much is this company going to pay me, for life, for the rest of its useful life. And you put a value on that. You can calculate what it's worth now versus what it's going to pay you in the future. And I think SoFi is going to bring you some of the safest, some of the most assured, some of the, do you want cutting edge or do you want, a sure thing? With my investments, my retirement, when I'm too old and decrepit to work, I want a sure thing. I don't necessarily want a guy with long hair. I don't necessarily want a guy with fancy shoes. I don't necessarily want a guy who's so caught up in believing that his own, S don't stink. Like, Carb from Pelly's like, why do we even do, earnings reports? Like, we should just do a mic drop and go home. Whereas Anthony Noto is humble. He's a grinder. And that's another thing that just comes down is like the quality of the management is what leads to this incredibly consistent execution. I mean, how do you achieve this? Because you're looking to the future and you're planning better than others. You're hedging against risk. You're hedging against seasonality. You're hedging against everything. You're hedging against defaults. So durable competitive advantage, it doesn't just come down to the lower cost of capital completely across the board. It doesn't just come down to the wheel strategy, the cross-selling business model. It comes down to something even more foundational than that, which is, like I said, this brand identity, this ethos. Why does this loan platform work? Because, the counterparties want to have a long-term, decades-long relationship with SoFi. The NBA wants to have a long-term relationship with SoFi. More importantly, the members want to have a long-term relationship with SoFi. SoFi's building themselves a place. You want to come to get a mortgage. You want to come to get a loan. You want to come to refi so you want to come for the biggest, most important purchases and decisions of your life. SoFi wants to be your partner. They want to help you. They want to give it to you for less cost, give it to you more simply, more straightforward, and help you get your money right. You don't think about some of these other fintechs in that same light. You think about them as being more slick, more flashy. We like to give multiples. We like to pay for, shiny, sexy objects. But Noto was even talking about that. The order you do things is important. He's like, for us, we had to get this loan platform. We had to get the technology straight. That was more important than a new credit card. That was more important than a full suite of options. those are things you can go back and add in later. And as you were noting now, they're also able to add in crypto again. But Robinhood, I don't think, can go back and become a bank. Now, with the new administration, sort of all bets are off. Rules are being written as we go. So it's really impossible to say for sure. But anyway, guys, welcome and hello and welcome. It is un poco mas. Sorry, I'm sweating like a whore in church in this Canadian fintech mafia hat. I've got like 3 shirts on. It's like 85 degrees. Anyway, what's going on? The great Payush, what's going on? Welcome and hello, guys. It's un poco mas. Got a lot of things going on a Tuesday. Yeah, so we talk about brand identity. We talked about reputation. How do customers view the company? As a lifetime partner or as more of a get rich quick thing? I mean, but like, yeah, they're growing, but they're not growing quickly like, a Robinhood or some of these other fintechs like a Nubank. And I know this is crude and it's inappropriate, but it's like one guy, Anthony Noto, is trying to sell you life insurance. He's like, listen, he goes, I know this isn't sexy. I know nobody likes a monthly payment for insurance, but let's take care of the family. Let's take care of the future. He's able to sell life insurance because he's an honest, direct, straight, like, and some of these other fintechs, I feel like they're trying to sell you crack or, at best aluminum siding, where it's fast money, it's easy money. It almost sells itself and it's cheap. And I don't think they're going to be able to sustain that growth for 20 or 30 years and become the next JP Morgan Chase. Do you see these huge blue chip companies? What are they doing? Are they the big trading houses? Yeah, of course, some of them are, the BlackRocks and stuff, but I don't think that's what Robinhood's going for. They're consumer centric, obviously. But I think SoFi is going for it all. And I think over a period of many years, they can add back in almost everything a company like Robinhood does. I don't know that Robinhood reputationally, sort of in their focus, in their ethos, is going to sort of capture, the spirit of what SoFi does. That unaided brand identity. They started out like less than 1%, 2%, got up to 8%. I think SoFi is now something like 15%. Could be wrong. I haven't looked it up in a while. The point is, SoFi has done the difficult, sort of drudgery, the foundational work of integrating the tech stack, integrating the bank. It lowers their cost of capital forever. No, it's like shipping a credit card is not a durable competitive advantage. It might even be a disadvantage. It might be a product that loses you money over time. It's a tough business. What business are you in? How do you actually make a business? Is it proven? Lending is proven. Lending makes money. Selling software is proven. Sending something now, trading, payment for order flow. These are very new concepts. And I know people think crypto is just going to go forever and it's going to provide, a ton of profits for some of these fintechs over time. But I think there's always going to be a new flavor of the month in that space. I think it's going to get divided up. I think there's going to be, hot then not, where I think somebody, like a company like SoFi, that's a lender, that's stable, that's, revenues tend to consistently grow rather than spike and then reduce, seasonally, depending on the economy. This is what you want to own as an investor. This is what I want to own as an investor. And, I've carried on and on and on about, the test, the sort of trial by fire that SoFi management faced with COVID, the end of student loans. I mean, don't forget, this was a student loan company almost purely, like 5-6 years ago. And now they're this full integrated technology company, financial services company. I have no doubt they're going to add in options and crypto and all these other things over the next few years. It's not a race, it's a tortoise and hare, or not a, tortoise and hare situation. I don't necessarily want to be the tortoise, but I also don't want to, gas out too early. Like a fat guy trying to run a mile. I'm like, oh, I'm done. Go shoot. That's only 3 laps. It's like, I know. And it still took me 12 minutes. Anyway, guys, I don't know. I just wanted to talk a little bit of SoFi because I just haven't talked about it in so long. And it's, you always get these analysts, they think it's their job to step on rallies, or to essentially trash a stock that's finally getting a little bit of traction. But I personally don't think it's going to work this time. I think there's a lot more room to basically move up on this chart. All you have to do is break this point down, and you're essentially hitting the same resistance points over here. I mean, excuse me, resistance points down here. But once you get through here, I think you're going to go to all-time highs. You know, maybe not necessarily 29, but I think you're definitely going to push up into the mid 20s. Not definitely. It's just, of course, idiotic speculation. I don't know where they are, Mr. Premium the option. We might have to demote you to moderator. What's up, Wheeling, Idaho? It's a great Payush vodka. I agree. Yeah, it was a nice clean dip. Shares short percentage, Payush. Let's take a look. See. So the shares are about 14% of the free float. The short interest is 150 million shares, and shares on loan is only 97 million. So there's a lot of naked shorting going on. Utilization is low. Cost to borrow is still damn near zero, as it always is on the SoFi stock. Yeah, they're still shorting it pretty heavily, Payush. I mean, I don't know what these guys are. They seem to do it in reverse. They short from the lows and are forced to cover high. I think Hindenburg had it right in that respect. But if I've been looking at stocks and companies for the last 30 years, I don't know if I've ever seen a company turn in more consistent, reliable growth, performance, execution than SoFi and Noto. They just give me supreme confidence. Their command of the numbers, their command of the space, their command of the technology, getting back into crypto, getting into these blockchain transfers. They're innovating. They're innovating in ways that just are not so apparent and obvious at first. It's not like slapping you across your testicles with a gold-plated, diamond-encrusted credit card. You're like, oh, that hurts. Of course it does. They just hit you in the nuts. You know, it's going to hurt. But anyway, so yeah, up a little bit after hours. It just loves this resistance here, but if we can push up close to $20, I think 24.75 is right in the crosshairs. But of course, all the growth stocks kind of died today. CRISPR was down, SMCI was down, NEO was actually up a little bit, but up to 350. It's kind of not saying much. UBX is crashed off of 80 cents down to 34 cents. They're basically apparently going bankrupt. We'll have to see how that works out. VTAC spiked up to like 80 cents. I sold almost all my shares at the very, very top. That was quite fortunate. 10X, I'm still holding a ton. I'm just going down. The JAGX, the worst stock in the history of the world. It's gone from like $4 billion a share to $2.50. AMD, I just own a tracking position. So I don't know why I even have this up. Some random portfolio. Apropos of nothing. Yeah, Chucky's, well, I think they have plenty of announcements in the bag, and they can announce things whenever they want. I think we go to 16 or close. Yeah, I mean, Wheeling, Idaho, that wouldn't be at all. Last time we went up to 18, we went all the way back down to 860. So 16 wouldn't bother me at all. That's very minor retracement. So yeah, you're probably right. Dimitro, why is CRISPR not squeezing? I mean, that's a great question. I think it's essentially because a couple of the ultra powerful shorts just don't want that stock to squeeze. Now, if you take a look at what went on, I mean, even today, they're borrowing again. Cost to borrow average today was 36. Now, you see these official reports, 30K available, 15. Cost to borrow 48% all day long. Cost to borrow max 85.08. And then if you start to look at the short interest of free float, 26%. 24 days. This is the key. There's no liquidity in the stock in CRISPR. Days to cover is 9. Look at the shares on loan has gone to 38 million. There's only like 90 million shares that exist. Utilization's been pegged at 100%. Short score 92 out of it. This is madness. It's madness. They're paying 50% on almost 40 million shares on loan. It's insane. I don't know how it's not squeezing. I don't know how they're not buying shares. I don't know how they got into this position. I don't know what the shoe is going to be to drop. I don't know if it's going to be a short report. I don't know if it's going to be some bad data. I feel like these shorts must have some kind of insider information, or they're just stuck in this position and their algo's broken. They have tiny wings and they just don't know how to get out of it. But otherwise, how does this make sense? I mean, they just announced good data. They just had like 3 good analysts come out and give price targets of like 81, 82, and 105. I mean, one hack came out at 45, but again, tiny wing loser. Oh God, I got a shiny forehead. Retracement 16 is good, so we go higher in the earnings. Hopefully, it won't crash. Yeah, I mean, 16 would be no problem. I wouldn't have a problem with 15, 14. It goes down. It goes, they move it up and down. The stock's always moved like like a yo-yo. Payush, also celebrity Christopher. I couldn't do much. Run backups appreciated. Yeah, guys, I got to run. I really appreciate it, but tomorrow is going to be a really critical day in terms of the overall market. And in terms of these growth stocks, because momentum is everything for these stocks. Futures are basically flat right now, so it's anybody's guess how this thing shakes out overnight. We see just how sentiment comes out in the morning. A lot it's going to be, what does Trump say? What's going on with this tax bill? What does Elon say? It's all just a giant clusterfuck, snafu, situation normal, all fucked up. Anyway, guys, it's un poco Moss, the show where we give you just a little bit more. Thanks a lot for watching. Peace.